Hey everyone, hope you're well. 2026. Thought I'd provide a little update to what I'm doing, and still working on finding a model that resonates with me. Been a long process, but I haven't given up, and I'm pressing on. So my model is, I've been testing this for a while, going back through historical charts and testing, but I'm going back to some original content by ICT. Went back to his silver bullet model and really watched his original silver bullet presentation several times, made sure I had a good understanding. And I'm blending that concept with some levels here. Some of you may recognize these as Goldbach levels. This is not a lesson on Goldbach. This is not a lesson specifically on ICT silver bullet. This is just a kind of an update and sharing how I'm blending a couple of different ideas together for a model that works for me. This model may not work for anybody else except me, and that's okay. It doesn't really matter. This is a paper trade from last week. My focus was on the PM session, silver bullet time, which is from 2 p.m. to 3 p.m. I'm not going to go into details explaining what silver bullet is. You can go watch ICT's video and he breaks it down for you. But if you know what it is, I'll go into it a little bit. But what you can see here is my first and foremost, my draw on liquidity was this level here, 25272. So that's where I expected price to draw towards. Now it didn't have to get all the way there, but my expectation is that price would move in that direction. Essentially, I waited for an inefficiency to form in the direction of that, and that's kind of here. It's not a very good one. I'll zoom in. The inefficiency is actually right there, and you can see how price kind of consolidated around that area. I ended up entering the trade on this down candle right here, this down close candle. It was three contracts, three micro contracts, by the way. I'm not trading E-minis, I'm trading micros for now. And that was just before 3 p.m. And we can see that price went straight up exactly to that level. And that candle right there, you can see almost to the tick. I took some partials. I took a partial early right here because I saw price was starting to slow down and it was very close to the end of the day. Took another partial right in here when price hit this 97% level. And then at the market close at 4 p.m., when price started reversing, I got out, completed the trade there. So all in all, it was a good trade. Yesterday, Monday, April 13th, 2026. This is just analysis. I didn't take this trade. I wasn't present during this time. But this is an example of going back and looking at how things played out. My draw on liquidity is this previous daily high, 25,393.50, which is exactly at equilibrium of this 243 range. So we can see the silver bullet time, 10 a.m. to 11 a.m. We see the first bullish fair value gap in the direction of that draw on liquidity. You can see how price, went through it, but the body respected it. That could have been an entry there. And price continued and delivered exactly to that high. About an hour and a half, maybe a couple hours later. So I missed this, but this is an example of me going back and just observing the price action and mapping it out and charting it out so I can get a good idea of what it looks like. But yesterday afternoon, took another paper trade, and a couple of things happened here. So first I had my draw on liquidity incorrect. I was actually looking at a 1 hour BISI down below. And so when I saw the SIBI right here, I took the short, thinking that it would draw down towards that BISI, or that SIBI, I mean, sell side imbalance. No, it was BISI, sorry. Bullish fair value gap, if you will, on a 1 hour chart. My stop was above this little high. I got stopped out, pulled back, I rethought things. I saw this bullish fair value gap over here, and I saw another one form exactly with it. Okay, during the silver bullet time, which is also at this key level right here. And when I saw this candle, the body respect these fair value gaps, I entered the trade when it wicked in to that area. 3 micro contracts. The first one, I exited here at this minor buy side liquidity. And the rest of it I let run to the previous weekly high. And there's limit order there, and the remaining 2 contracts got out there. Today, took this trade on my prop firm account. Silver bullet PM session. So what we saw here, we opened, traded low below this 15-minute low, sell side liquidity, that got swept. I made a mistake. I was down on the 15-second chart. And on the 15-second chart, I saw a little bullish fair value gap. I entered in that, and my stop was below that low. Got stopped out. Pulled back to the 1-minute chart and waited for this fair value gap to form. It formed. I entered right there. Exited just before this level. Things were starting to, I just kind of had a weird feeling about it. And when price aggressively dropped, I moved my stop to break even and got out. That gave me a couple of minutes to reevaluate. I saw price was respecting this fair value gap. I entered again. I did suffer a little bit of drawdown because my entry was, at the beginning of this arrow right there. That's where my entry was. It was a little bit high, wasn't perfect, but my stop was below this low down here. And it was an acceptable risk for me. But once I saw that price was respecting this fair value gap and began moving, my terminus was just this minor buy side liquidity up above. Price ultimately did go higher. It did go to this 243 range high. It traded all the way up there. But for me, I'm happy with just taking the quick trade from down here to up here and exited. So that's kind of what I'm working on right now. Focusing primarily on the New York PM silver bullet times from 2 p.m. to 3 p.m. and blending what I see there with Goldbach levels to just add a little bit of confluence. And that's it. So thank you for watching. I appreciate it. And stay safe out there, my friends. And good luck. Cheers.